Welcome to Peak TV. I'm Nick Dagan, Executive Director of Peak Asset Management. We got Andrew van der Zwaan, Chairman of MRG Metals. Andrew, it's really nice to see you.
Hi, Nev. Good to see you. Merry Christmas.
Merry Christmas. Andrew, what a year it's been for the company and also for the stock market. Now, let's just jump straight into it. So in June, you announced a joint venture with Sinolin Lithium, and that's to develop your HMS project. Can you just summarise the key milestones achieved since that announced?
Well, it's good timing to have this conversation because we're now pretty much 6 months into the joint venture. And in that time, there's been a lot of things that have occurred, probably faster than what we anticipated. Some of them a little bit slower, but some of them outside of our control. Predominantly, we've now reached 6 months of payments from a joint venture partner. That's $25,000 to run our Mozambique operations, and they've honoured that commitment, and we've received our payments up to the 12th of December, which is very pleasing. In addition, MRG Management received $15,000 a month to administer the licensing approval processes and the general operation of the Mozambique entities from the ASX listed company MRG. So that's sort of the background component of the financial position that we get paid by Sinolin. But more importantly, they've independently of those payments, made payments towards a number of activities that some of our shareholders may or may not be aware of. Predominantly, the two main areas that we're driving are the mining license approval process, and we've hired consultants to help us work with the Mozambique government, and that's progressing really well. And hopefully in the next few weeks, we'll be able to give an update on that progress. But more impressively was the environmental and impact assessment study that our partner has commenced in good faith ahead of the mining license approvals. And that was a $500,000 commitment that they've entered a contract with a third-party provider in Mozambique, and that has progressed on what should be a 9-month contract period, but it's good to get it underway so early in the process. And from a timeline perspective, that's probably one of the critical paths, and we've entered that contract 2 months ago. So we're well in progress there. The other aspect that shareholders may not be aware of, and certainly one that the shareholders that have contacted me directly have asked, is what's going on with the scoping study, and what progress has the company made in that regards. And I can assure shareholders that the Chinese are very thorough in their processes, but they do things a little bit differently to us. But for us to submit the revised mining plan applications, we had to submit the financial estimates for the project and the scoping study and plant design. And we've successfully done that. The Chinese entered into a contract with an engineering provider early into the joint venture arrangement, and they successfully provided us a revised scoping study. Unfortunately, we weren't able to announce the details of that scoping study, other than I can say to shareholders that the scoping study is commensurate with what we did ourselves and announced back in 2023, but on a reduced scale. Because if shareholders will note, the joint venture is fully funded through to 3 stages of production. The first stage of 110,000 tonnes per year of concentrate reflects what would be about a sixth of what the size of the scoping study that we did independently before the joint venture. And then stage 2 ramps up to 220,000 tonnes, which would be about a third. And then stage 3 runs up to about 440,000 tonnes, which would represent about 2/3 of what we did in the scoping study. So whilst the ultimate design and the processing that we use in the ultimate mine design will vary slightly from what we did, the scale is commensurate over the stage 1, 2, and 3 development.
And Andrew, I mean, that brings me to the second question. I mean, the Sinolin Lithium, I mean, they've obviously already invested, I think, over, you mentioned $2 million or so, which is significant working capital progressing the joint venture. Why do you think this is so significant to shareholders? It does seem like they're fully invested, right?
Yeah, they've been more than surprising for us. Their commitment to timeframes is extraordinary, and they're driving us as hard as our shareholders are driving us to move this project forward. I can tell you, there's no way known we would have been able to get to this development stage ourselves. We've had this project, as you know, for a couple of years. We were very effective in identifying a massive resource. We did mineral resource estimates in excess of over 1.2 billion tonnes, but that's grown to over 2 billion tonnes, which is just an enormous enormous resource. And then we did a scoping study that identified that we needed to spend $250 million US to take this project in the traditional way that an Australian company would take it to production. And we tried to find the appropriate partners, but the complexity with heavy mineral sands, it's unlike gold or copper, where you've got predetermined markets for your concentrates or your finished product. Mineral sands is quite specific. You need to find an off-taker for the product to justify the capital expenditure. And what we've now identified is that pulling all those pieces together independently as a small junior exploration company of limited resources and limited access to capital in Africa, our best move forward was to find the appropriate joint venture partner. And we tried to do that for about a year and a half with a number of parties. And as you know, we entered into an arrangement with one party last year that fell through, and actually that significantly hurt us. So when we started renegotiating with other parties, and there have been other parties that are interested in this project because of its scale and its mine life, it's pretty unique in that perspective. But we didn't want to come back to the market without having a binding joint venture agreement. And to our pleasure, the arrangement we now have with Cinnamon is showing us that we have a partner that's committed to take this much further than we could have on our own. And that's a huge benefit to our shareholders.
No, it seems like a great partner. And Andrew, just a lot of questions that we've received just regarding, obviously, the joint venture's already spent around that $2 million you mentioned to date, so they're very well committed. But there is a milestone regarding finalising the joint venture and that $3 million US. Can you just provide, our shareholders and those listening any further updates on that?
One of the delays in the corporate structure will be a Hong Kong-based joint venture parent company, which when the final transaction occurs with the Mozambique assets being transferred into the joint venture companies, that company will be 70% owned by our partner and 30% owned by MRG shareholders. That company was actually set up very quickly in the first few weeks of the joint venture. The subsidiary to that company is the United Arab Emirates joint venture company. And unfortunately, that took us a little bit longer than we'd hoped to set up. But we jumped that hurdle about 6 weeks ago. And we're now in the formal process of finalising the transfer of the Mozambique assets, which currently sit 100% owned by MRG. And we're looking to transfer them into the joint venture vehicle out of the United Arab Emirates. That process is almost finalised, and we should be hopefully in a position to announce to the market in the next few weeks that all the documentation has been submitted to the Mozambique government. Our experience when we previously acquired the projects is that process itself can take some time. But given that we're so far down the track in terms of mining license approval development and some other permitting aspects as well, we feel comfortable that the Mozambique government will actually move this one relatively quickly. But our partner has assured us that the $3 million is ready to put in the bank account. And as I've said to you previously, at this point in time, they've already committed a substantial portion of that money in the money they've spent. As I've said, they've committed to pay $240,000 US to us already, US dollars, and that's been paid. They've committed to the environmental contract. That contract has been signed. They've had the engineering and scoping study work done by an independent third party. They've got their internal team of engineers working on the design and procurement processes. So they're really very well advanced. And I know that I get asked this a lot by shareholders, where's the 3 million? Where's the 3 million? And I can understand the frustration, but I can assure you that the joint venture is acting as though the 3 million is in the bank account. And from all intensive purposes, they've already spent a fair portion of it. And we'd be looking forward to the next 3 million being allocated to the joint venture as per the contract.
And Andrew, I mean, just this whole drag-along clause is an interesting one. I mean, $50 million, I mean, as a minimum US. I mean, it's under a $6 million market cap. What does it actually mean for the company?
Well, I think the pleasing thing for us with the 50 million clawback was it protects us if, as a minority shareholder to a joint venture, which we will be, a minority party, we wanted to be protected in case our joint venture partner just wanted to take a smaller windfall profit than we would have liked. And we didn't want to be forced as a minority player into that position. The pleasing thing is they didn't balk at that. That wasn't the hardest part of the negotiations in this deal, I can assure you. So they're looking at the longer term picture. And whilst I think that they're inherently looking for a sale at some point in time, they understand that growing this project in scale and demonstrating its longevity will greatly improve their sale value as well. So I don't think they're looking for a short-term exit, but we'd be more than happy if we did get dragged along for that, given our market cap today. But I think the long-term prize here for shareholders is to get this into production, show its cash flow capacity, and then build the production capacity to much bigger than what we've planned in the stage 3.
Andrew, we're sitting at under $6 million market cap today leading into Christmas. I mean, you've got a great joint venture partner that's committed to already has spent over $2 million. There's more money coming through. It seems like there's a lot happening in the background on a positive. I mean, why should investors be buying the stock right now?
Well, firstly, I think those of us who understand the market at the small end of the mining or junior mining companies, we understand that sometimes the excitement is in the exploration. And for us, unfortunately, we probably never rode that wave of excitement. And we've moved from an exploration company, which we really are. Our expertise is very much in low-cost exploration, and we've done that very, very effectively in Mozambique. But we're now moving from an exploration play to a development play. And there's a litany of companies on the ASX that suffer from that period because there's a lot of questions about, well, where do you get your capital? Well, we've answered that question. We've got a partner that's going to provide that capital. How long is it going to take you to take this project from a resource to, feasibility, pre-feasibility, banking feasibilities, final decision to mine, all the permitting, etc.? Most of the time, that's a 3 to 5 year program. We're well advanced in that process, and we're comfortable that we can. And certainly, our partners looking to get into production in the next 12 months. Now, that might be a very, very ambitious objective, but that's what they're driving towards, and they have capabilities that we don't. So as an investor, you've got an opportunity to get in at a company that's got additional resources to just this one. This is our prime resource and our prime focus, but you've got an asset that could have multiples of where we're at now that could potentially be in production in the next 12 to 24 months, funded by a third party. And we're running the company on a shoestring, which we'd all like to have more money to do more things, but we've taken a prudent approach. We think that it's the best value to our shareholders to try and get this thing revalued on the basis of near-term production. And as we move into 2025, we'll become closer and closer to that vision, and people will see as we hit more milestones that the risk factors of this project begin to diminish. And we all understand it's Africa and the uniqueness of trying to operate in Africa, but we're a lot further along than we've ever been, and we're in a much better position than we've ever been. It's just not reflected in the share price, and we all share that frustration. But our job is to just keep moving the project forward. We've got a partner that's predominantly funding us. They're in the process in the next few weeks. Hopefully, I'll be able to announce that we're going to transition the project from us operating it to them operating it. So that's could be a major milestone as well. So I think we're in the best position we've ever been as a company. It's just not reflected in our share price.
Andrew, I mean, we're major shareholders, big supporters, so I appreciate the work that you're doing in the background. It seems like there's a lot of positives and deliveries that's happened in the last 12 months, and hopefully this time next year, as we've closed to Christmas 2025, we'll see the stock, market cap at least at a 30 mil to 50 mil market cap, which I think is realistic on some of the milestones that you've outlined today. So I want to say thank you and Merry Christmas to you and the family, and look forward to a big 2025 together.
Yeah, thanks, Nev, and thanks shareholders for the support, and let's hope 2025 is a big year for MRG.